Good evening, Manoj.
Hi Mukund, how are you?
How are you in England, or is it Scotland, or is it Ireland? Such a beautiful
Virtually
house.
everywhere in the world.
It looks very nice. It looks very green.
Yeah,
It actually looks like you're in Seattle somewhere because Seattle is always
I'm
raining
just next door to you.
next door. That's right. That's right. Awesome. Good to talk to you. How was your week? How was your trading week?
The week was okay. I mean, I wasn't very aggressive with trading. Had some shorts, covered them in profits, and then again created shorts today. I'm just waiting for markets to move. Shorted because we had the switch in contract on TradingView that helped me see something which wasn't visible earlier. So hopefully markets should give me some trading or some more profitable opportunity by next week. Let's see.
Yeah. For me, the good thing was GitLab on the week.
Yeah, I saw
But
that.
NDB will actually do better. I mean, I don't hold through earnings, so I never take that risk. I'm happy
Hmm.
that that didn't hold MDB through the earnings, but MDB I thought would have done a little bit better. Bates did well, good earnings as well.
Yeah.
But overall, and even Broadcom, right? I was expecting it to do okay. Lots of companies reported last week, as I mentioned, GitLab, MDB, Braze, BRZE is the ticker symbol, and the other company that actually had good earnings were Lululemon,
Hmm.
and heading a little bit higher after that. Let me just share one interesting chart that has come up. What's that noise in the background?
I think it's my kids.
No problem. One of the interesting charts that I was going to share, there you go. Uh, Snowflake.
Hmm.
So if you look at it from an extremely long-term perspective, it is still basic, right? You could call it more of a, if you look at it on a monthly chart, it was basing and it was just going around doing whatever it did.
Right.
Uh, See, you can see over here, it actually for the last, I would say, nearly 6 months to 8 months has been in the range of about 180 to 110,
Right.
going up and down between 130, 180, up and down, up and down, up and down. This is a good base. It's still not a perfect base, but then if I look at the weekly chart, it's actually coming up to a double top.
Hmm.
So this 190 is a critical, anywhere from the zone is between 190 and 200. If it
Right.
fails again, then it is, multiple top. Just look at this consistently going down.
Yeah.
But I think the momentum is with these guys for the moment. If you look at the daily chart, you can see after the head and shoulders pattern moved rapidly down, tried to do a stage one accumulation, a markup, but really after earnings, the candle was not good. That's what gives me pause, right?
Hmm.
Good earnings, but the candle after the earnings is just, bulls and bears seem to be right in the middle. It's a
Yeah.
doji with not that much
Yeah.
conviction. And
Yeah.
since then, it is formed some kind of a pattern, but it's not very easy to figure out whether this is going to go up or down or anywhere.
Right.
So, Snowflake, while a lot of people have thought about this company is a very good company. I just wanted to show something really quick.
Oh.
Financials, we look at the fundamentals, right? If you look at the income statement and specifically the revenue growth, it's gone from 96 million in 2018 to 2 billion, 20 times,
Wow.
right? Phenomenal
In
growth.
4 or 5 years, that's a phenomenal growth, no doubt.
5 years, it's gone 20 times in terms of revenue, right?
Hmm.
But which is good. And now their margins are solid in the 70, nearly 70% range. Net margins are a little bit challenged, negative 30% range. But if you look at the quarterly, they are turning it around. Look at this. It's consistently gone from 225 million, 226 million, 214 million. So they're dropping. Their losses are dropping. They have enough cash in the balance sheet not to worry about it overall. But one of the few companies, there are only two companies left that are growing at over 30% in SaaS. And that is
Hmm.
Snowflake, and the other company is Sentinel One,
Okay.
right? So you look at this, and then the other challenging part is just the valuation, man. It is growing at 30%, but 23 times price to sales for a company with about 60, 70% gross margins and negative 30% net margins. So valuation has been the biggest challenge for Snowflake. Otherwise, I think it is a good company, but I'm not necessarily sure I'm going to, initiate a new position at this point. And a lot of people have asked us. Um, I want to have it clear. If you look at the
Right.
long-term chart, it's still basic.
Absolutely.
It's still a
And
base.
I think that the basing is very clear with the when you look at it from the valuation perspective as well. It makes sense. The basing makes sense.
Yeah, you want to give it time. You want to give it time. You want the revenue to catch up. Even though it has gone up 20x in revenue, the valuation is still so rich. And it's growing at 30%. It's not like it's going at 50, 60%.
Right.
Anyway, good. I was watching two stocks last week, Affirm and Lulu. Both are strong. Both did very, very well. All right. Those were the key important updates. Now let's go to the SPY, QQQ, and Manoj. Give us a rundown of how last week went and what to look forward to.
Okay, here we are. And this, I think, let me move to SPY first, and then we move to NASDAQ and Dow Jones. Six weeks of consistent gains for SPY, 6 weeks of consistent gains for QQQ, and 6 weeks of consistent gains for DIA as well. We all know that whenever markets rally at a stretch without any pause or corrections or any pauses for bulls to catch up, these are the times when normally markets do give a massive correction and massive crashes. I'm not sure whether it wants to give any massive correction as of now. The only reason I went short for is the switch in contract. Let me just give me 1 second. Let me go to this, and this is the original car. So it gives me a reason to be short. There is a new high being made. RSI is not making a new high. One. Secondly, it is still in that resistance zone. It's not cleared it convincingly. There is no volume. I mean, if I add the volume is still very low.
Volume is a little bit more than average. It's not high though.
Yeah, it's not high. So if I move back to the new contract, there it is. And I have gone short. Now look at the new contract and look at the volume now. So volumes are not as high as it should be, although it does give us a breakout from the consistent key trend line. But there is a 50-point premium from the old contract. 50-point premium is huge. That's huge. And hence, I do think this premium needs to be corrected. Whether it gets corrected after hitting all-time high, whether it wants to correct now, I would expect at least next couple of weeks, it should be some correction. I would not expect it to go down by maybe up to all the way up to 4,400 or 4,500. No, I don't want to do that because I don't think there is any possibility or there is any reason for markets to correct that much. But there has to be some breather where markets gives us 50-point, 70-point correction, wherein hey, all those bulls we have lost out, they get a chance to come back in. So definitely, whenever there is a 40-point, 50-point kind of correction, there will be bulls who will be coming in and pitching it, chipping in their pennies and their dollars. But I don't think there is any possibility as of now to go all the way to 4,400, 4,500 at this moment. Maybe into next year, but definitely not at this point.
So you're calling it more of a pullback than a correction, right? A correction is 10%
Absolutely.
here, which will
Absolutely. No, I'm not calling for 10% correction at this point. Maybe into next year. Till the end of December, at least till this Santa rally is over, till we are over with 2023, I don't think there is any bigger correction line. Not 10%, maybe not even 5%.
Yeah.
Next,
no, I totally agree.
NQ, which is NASDAQ. Pretty similar chart. No big deal, no big movement. I mean, on the face of it, does look like it has broken out again from the bigger trend line, and it's not far from all-time highs. All-time highs is 16,700, 767, and we are at 16,300. So just 400 points away from the all-time high. So I won't be surprised if in the by the end of this year or maybe at the start of next year, we do hit all-time high and then maybe try and give some correction.
Yeah.
Pretty similar. Dow Jones, almost there. 36,600 we are, 36,800 is all-time high. So
it's in the zone.
Not far.
It's in the zone.
Yeah. So not far from all-time high.
Markets, all three markets need a little bit of a breather. I mean, just look at that candle. Look at that candles. I mean, look at the last 5-6 weeks of just up and to the right. This is just beautiful.
Absolutely. And although it is beautiful, but it calls for.
Yeah. Manoj, can you go back a little bit, a few more years? When is the last time we've had 1, 2, 3, 4, 5, 6 weeks? I'm looking at this chart and trying to see when is it that we had.
There was 1, 2, 3, 4 here. There was one red and then again 3 4 consistent green candles. This was when we bottomed out sometime last
This
year.
is 2022.
Yes. So if he had 4, then 1 brother, and then again 4.
Look at this
Before
one.
that,
There's a red one there. Oh yeah, here back in 2019. Look at 2019.
18.
That is the only time
1,
I can see it.
2, 3, 4, 5, 6, 7, 8. That's 2018. Yep.
Yeah.
December 2018.
I don't think I've seen anything like this before. This is 1, 2, 3, 4, a little bit of a break, 5, 6, and 8, and yeah. So you might get a slight movement to the red, but the other thing is it could go on for a little bit. You might get a very small dip in next week and then rip to the end of the year.
Let's just go back to how we bottomed out. Since you're talking about the corrections and then rallies, let's see how 2008 was. This is 1, 2, 3, 4, 4 months of consistent gains. If I go by a week, here we are.
Oh, lots of weeks.
2008.
1, 2, 3, 4, 5, 6.
Yeah, there were. So maybe this is how it bottoms out. And if this is the case, then probably we are looking for some more gains, maybe some corrections, some kind of a small dip, pullbacks, and then big correction.
Yeah, no, I agree.
Give me 1 second, please. I just have to go into some.
The interesting part while you're trying to get set up for the next one, the interesting part to me is also oil. A lot of people are coming back and they were expecting a rally in oil about now 4 or 5 weeks ago, I think. Saudi Arabia called for a cut in OPEC production. Nothing happened. Oil has been going down and to the bottom. And oil is now actually at $69 a barrel, which is ridiculously lower price. And that many people are questioning whether they should buy an EV or not. So, people tend to have small, short memories for most parts, for most parts. But, a lot of these things in terms of how they set up, yeah. Anyway, let's go to IWM. This is the Russell 2000.
Yes.
Russell 2000 is still struggling.
It is still struggling, and that's the main concern, to be honest. If you look at from the daily chart perspective, it is still moving in tandem with this channel, but I don't think there's still a concern of any bigger breakdown in the small caps. But from a weekly perspective, it still has a long way to go to catch up with all the other bigger indices. I'm not sure whether it wants to break out of this particular zone and move out of this particular zone of 2000 and beyond, because it has a big worry of 200 MA at this right way. We are stuck right now at 200 MA on the weekly. Unless it sustainably stays past this with volumes, I wouldn't be very bullish to all the way up to 2000. So as of now, it's a worry. Let's see whether it's able to sustain beyond this thing by the end of this year. Looks very unlikely, because even if it's sustained, that would not be called as a sustenance because it's a low volume month all the way. So I would be very cautious on the small caps.
1900 range on the Russell 2000 futures is also a supply zone. Yes. So many times that it has, look at that, 1, 2, 3, 4, 5 times.
All the way here, yes.
Yeah. So this is a good supply zone as well.
Yes.
Anyway, okay, that's how we're doing on the Russell 2000. How are we doing in terms of dollar index and US bonds? Well, bonds seem to have
yield.
That's also funny, right? People were expecting 4, 6 weeks ago it's going to cross 5. Now it is. I can't think of a quicker downward.
It just touched 5. It just touched 5.02, and then has just come off. Still inside the channel, so nothing big as such in terms of big breakdown or as such. It's coming off. It's coming off from the highs of 5%. Yes.
Manoj, there's another channel. If you look at it in the short-term perspective, just to give you a sense, right? This is also one channel.
Yes, it's
right?
a certain
so you can see
you want to make it.
See that, yeah. Yeah, look at that. There's a channel within the channel, and that also tells me, man, this has a chance to be able to bounce off of this. May not be in the long term, but it could bounce off of this. But who knows? Maybe it won't.
Look at this as well. Right here were once, twice. Right here it bounced from here, and we are right there. So probably a combination of this channel support and this demand line may result into some bounce. It would not be a durable bounce, I guess, but it will be some bounce.
Okay, good. All right, that's how we're doing in terms of the treasury yield. How are we doing in terms of dollar?
Dollar index stuck in a channel inside a demand zone, a big weekly demand zone. That's a weekly demand zone. It's not giving up. It has bounced back from the bottom of the demand zone and then again rallying, stuck between the 20 and 50 MA. But inside the channel are kind of a bull flag as well. Unless it crosses past that, bulls do not have a chance of calling it a hurrah or a big rally. But as of now, it is inside this bull flag. So as long as it is inside this, there is no big rally as such. There is no big breakdown as such.
Okay.
Unless it breaks down of this, I wouldn't be calling for bears to be rejoicing, because it has to break out. Convincingly, it should break down of 102.50.
The last one is gold. We were saying there's going to be a breakout in gold last week. That's what we were expecting. Oh, we were going to crude first. Okay.
Yeah. So let's go with the crude. Similar pattern. Let me just go with the weekly chart first. Demand zone just right under. So 200 weeks MA, which is at
63, 64.
70. 200 week MA is 70. Critical trend line support right here at 66. Demand zone between 62 and 68. So quite a few of supports right there. It has been falling for 1, 2, 3, 4, 5, 6, 7 weeks on a trot. Yeah. 7 weeks of downtrend. It has to reverse, maybe a bounce, maybe a rally. I don't know, because it has quite a few of support. 200 weeks MA, trend line, demand zone. So there will be a bounce. Probably at least 5% kind of a bounce should be seen in the next couple of weeks or maybe beyond.
Yeah.
Gold.
It looks like multiple signs are all set in the same place.
Yes. So while we spoke about gold we spoke about a big breakout on the gold, but there was one thing which I don't know whether I talked about on the call last time, but I did mention on the blog, and I had actually tweeted as well. This trend line was a big red zone for me. I said that this is the critical thing that needs to be crossed, which is 21.25. Where did we reverse from? We reversed from exactly just above it. 21.46 was the high, and then the candle which has been created is inverted, is hammer, and I wouldn't be very bullish as of now until it convincingly bounces from here, and that's a monthly chart right now. Let me move to weekly. That's a big bearish and engulfing candle. So chances are that it would come all the way to at least 20 weeks MA, which is 1940 kind of a thing.
Yeah.
And after that, it tries to give a bounce. So 20 and 50 MA right here. This is where it should show some bounce. But as of now, no, not very bearish as well. Not bullish as of now, because it has completely reversed the bullish thesis. But it should come all the way towards the 20 MA, 50 MA of the weekly.
Okay. All right. That's how we are with gold. Okay.
Let's talk about your stock now.
Let's talk quickly about earnings for next week before we go to the two stocks that I'm watching, right? Oracle is expected next week. Adobe, Costco, and JBL. The ones that I'm really interested are Costco and Adobe. I think Costco will do well. They always tend to actually have a good job. But let's look at Oracle really quick. Last earnings, go to the daily chart if you don't mind. Okay, look at the performance. Look at the gap down after earnings.
Wow.
Right? Big gap down after earnings, because they're not expecting to actually grow as quickly as they did, and actually rallied up all the way back. The gap hasn't closed. So a lot of it depends on this earnings. I'm not expecting big things from them in terms of this earnings, but I would expect if the stock and the earnings isn't good. See, this gap from before was
that's a big gap.
This is a huge gap.
Yeah.
Right? I'm not expecting 120 to 113 to be resolved anytime soon, even if they have terrific earnings. But Oracle, man, it's a very difficult stock to have consistency on.
I have never followed it closely, so I wouldn't know how it would behave, honestly. This is the only trend line that I drew maybe long back.
It's the problem with Oracle stock is sometimes it behaves like Broadcom, and sometimes it behaves like any other standard tech stock. It's just inconsistent. Dell, Oracle, they're just old companies that just behave very inconsistently in terms of stock. The other one is Adobe. Adobe is actually set up a little bit nicely compared to Oracle. Again, trying to get to its all-time highs of 680. If you go to the daily chart really quick, look at the beautiful move after last earnings. It was in the 550 zone, gone up all the way to the 600 zone. Very, very nice move. Did consistently well. So this was expected. Right? A couple of touches down to the 500, and then look at this candle. Look at these set of candles, beautiful set of candles, all the way from somewhere in the November time frame, right? November, then go up, move up to the right. Look at that November reversal, and then just up and to the right. Beautiful move up.
Absolutely,
the 600.
Looks good. Honestly, looks good.
Yeah, so I think Adobe will do well next 6 months or so. And it's probably one of the safer stocks to be able to follow and manage. It should get to the 700, 800 zone on the weekly and the monthly. That's going to be an all-time high. All right. Those were my stocks. The two stocks that I'm watching for next week or 2-3, I think Amazon is set up beautifully. Upstart is set up beautifully. Affirm is set up beautifully. So take a look at all three of the stocks. Amazon is just a beautiful flag. This is the weekly chart. On the weekly, there's a little bit of resistance, so I'm going to be a little bit worried in this 47 zone. There's quite not a little bit, quite a bit of resistance. It's tried 3 times and failed. Whereas now I think it'll attempt to move up a little bit higher, but it's set up very, very well.
Every likelihood that it will actually be crossing, because this hits consistently is a sign that it wants to actually go past it, just like the way ES and NQ did in the last couple of weeks.
Right.
Amazon is giving us the similar sign that it wants to move higher. This resistance needs to be crossed, and it would cross.
Yeah, it's just moving. It's on the edge, and I think it's fairly well set up. Upstart, another one. Man, this company Upstart, UPST is the name of the ticker symbol. Really bad fundamentals, man. This is just a pure trading stock. You want to make money on the stock. This is a ridiculous stock. This is just I don't even know why. But I can trade it consistently and you can make money. This thing is a favorite of Twitter, I think, overall. Right? Everybody talks
75
about it.
was high recently in August, and now all the way to 36.
Yeah, look at the flag after last earnings, and it's down and to the left. So this is going. Then look at that, the huge gap down, and the earnings before that, even bigger gap down.
Yeah,
it's ridiculous, right? But I think
this is surprising. I mean, in August, the earnings were positive surprise, and yet stock fell big time.
No,
and last time,
the August earnings were not great. That's one of the reasons why that's because this is compared to earnings estimates versus what.
Absolutely, I'm just talking about from the estimates point of view,
right? Dramatically lowered for them. If you look at it, just go to the fundamentals if you can. Can you just go quickly to the fundamentals on Upstart?
This is 1 second.
On top, go
I
on.
Never navigated, so how do I do that?
And then
right here.
And hold on. There you go. Go to the income statement. Go to the annual chart. Okay, look at this. 52 million went all the way to. It's grown consistently and then slowed down dramatically. And then go to the quarterly. So it's grown very, very well. But look at this. 300 million.
Yeah, this has come down drastically from 310 to 134. Wow.
It's just crashed, right? Halved.
No wonder stock is performing the way it is.
And the stock is going up to the right. But if you look at it from a long-term perspective, annualized revenue, Upstart has been terrific. Just look at the annual revenue and margins.
From 57 to 842. So the last 2 years is a slowdown. From 21 to 22 has been a slowdown.
And from 22 to 23, it's gone negative.
Yes. So
and that's the big challenge. Look at that. It's nearly a 50% drawdown. Trailing 12 months is 500 million versus next 12 months is 500 million versus previous 12 months were 800 million. So it's down about 40% or so. Gross margins are good. Net margins are non-existent, but this is a small company, early company. But man, I don't understand this stock. But it's a good trading stock.
And yet people want to have it, own it, and trade it.
Affirm looks strong as well. AFRM is the ticker symbol. Very well set up. Very, very well set up.
Give me 1 second. It's a wrong ticker.
AFRM, I think. Yeah.
Yes.
Beautifully set up.
Wow. but very bad. I mean, from the strength perspective, it's pretty much stretched. So
Yeah,
probably
it is
somewhere
going to
near
take a
to
break. I think it is going to take a break because it's just past the zone. It just went past the demands, one set of demand zones at least, at the 40 something level, right? And the next
it was
one is
around this
going to be
42,
at the
38
the
or
next
40
one is
level.
going to be at the 50. So it's going to take a break, but it's got a couple of dollars left. It's got a couple of dollars left on the top. But it's beautiful. You know, all the way moving from the 20s. Just look at this. This is a weekly chart you're looking at. Look at the last 5 weeks.
1, 2, 3, 4, 5.
From
This is for the 6
11s,
week.
it's gone from $17 to $40.
Almost triple.
5 weeks.
250%.
5 weeks.
Amazing. And why is that? I mean, is there some
Solid
calculation in
earnings.
terms of
Very good earnings, right? After a turnaround, look at the beautiful, what they call a beautiful bottom has been formed. You go back to the weekly, and look at that beautiful bottom. Let me just draw that. Such a nice, beautiful base.
You're talking about this base?
Yeah.
Yeah.
A beautiful base, and then now up and to the right. I think this is heading upwards, but we should see. All right, those are
50,
my
52
stocks.
is the 50, 47, 50 is the red zone.
47, it's going to take a break, whether it goes down dramatically.
Especially given that you know momentum as well as RSI both are overstretching on the weekly as well as the daily. So that should be a small red flag. I wouldn't call it as a big red flag, but small red flag.
Awesome. That's it, Manoj, from my side.
I have a couple of stocks. No, not Morgan Stanley, but Goldman Sachs, Roblox, and Wells Fargo.
Okay, Manoj.
Yes.
You're going to have to go through a couple of them yourself because I'm getting at the time to go finish my prayer.
Okay. So we'll just do 2 stocks, Goldman Sachs and Roblox, on the verge of a breakout, and it's a weekly trend line breakout. So especially given that rate cuts have been talked about, markets are pricing rate cuts, and banks have been coming off their negative news perspective to the positive, and that is the reason I have been tracking banking names for quite a bit time. Morgan Stanley we talked about last week. It did move. Goldman Sachs is on my radar for the next week. I'm still not buying it, but I'm keeping it on my radar, and chances are that it might break out. Then Roblox. Almost on the verge of a breakout. So I'm keeping these 2 stocks on my radar. Haven't broken out yet, but pretty much likely by next week it should break out. And if it does, it will definitely mention on our Twitter feed as well that you can follow, and then you can buy them if you feel like.
That looks good, actually. I like that chart.
Absolutely.
Again, one of those nice bottoms.
Absolutely. And it has, so this is basing as well as bottoming out consistently this entire range, and then range has narrowed down and all the way to moving towards breaking out. So
this is one of those predictable trading stocks. Buy it at 20 something, sell it at 40 something, go home.
Yeah. So all those who have been selling at this range, they would probably be selling, but they would want to keep an eye that it is on the verge of breaking out. So don't just lose hope.
Thank you, Manoj. Thank you, everybody. Please comment, please share. Let us know what you think.
Sure. Thank you.